Hello everyone, welcome to Just Invest Today, man, and today is a good day, man. Think about this. People have been going crazy about the delisting risk for Alibaba. For many Chinese companies, we've seen Alibaba fall like crazy. It's at a crazy price right now, $110. But look what just happened. The Hong Kong Treasury came out to talk about the Alibaba delisting. So we're gonna get into it and see what the Treasury said. Is this good news? Is this bad news? What is going on? So before we get into that, guys, can you please like this video, subscribe to my channel? I'm providing you with up-to-date content all the time. So look at this. Hong Kong's Treasury Secretary Christopher, audit regulator, deny claims of non-cooperation made by the SEC, Gary. And he says the SEC is unfair and ungrounded. So look what's happening right now. Hong Kong is actually coming out and responding to all this regulation noise going on in the market, creating Chinese stocks. So think about this. Do you think Xi Jinping would send out the auditors, send out people, the secretary, denying all these claims of that they're going to cancel the delisting of Chinese companies on the US stock exchange? Think about that. Why would Xi Jinping do that if he regulates everything? If he was really going to just decouple from the American economy? The Hong Kong secretary is coming out and saying that's false. Hong Kong's top security official audit regulators have hit back against the claims of the U.S. Securities Exchange Commission (SEC) that the city, along with China, does not cooperate with regulators in the U.S. Remember, Gary came out and said that he needs China to communicate and allow all the auditing to be able to be more transparent, and that they have a new act saying that we are going to be able to delist any Chinese companies if they don't regulate with our auditing. But China has said that they've been doing that. Hong Kong has allowed different companies to be audited by Hong Kong board, but it has to be from Hong Kong. But now the Hong Kong SEC is saying that we've been allowing this. So I'm just seeing this as an opportunity, as both sides are gonna eventually come to agreement. In my view, like, it benefits both sides to come to an agreement, even if maybe the USA doesn't like exactly what they're doing, but we can see that the China does not want to just take off the VIE off the U.S. Stock exchange. They're actually trying to work with the government. They're denying claims. They're doing all of that about Alibaba, about Tencent, all their strong companies. Secretary Official Services of the Treasury and Financial Reporting Council, the regulator in Hong Kong, rejected the claim and said the city has always allowed U.S. Public Company Accounting Oversight Board access to Hong Kong auditors and their working papers. So they're saying they've been allowing it, but I guess the US doesn't agree with it. We regret to see the US SEC in a statement on December 2nd describing Hong Kong as a jurisdiction not having worked with the US accounting, which is unfair and ungrounded, said in the statement late Friday. They urged the US SEC to correct its misleading statements. So there you go, man. Hong Kong is really trying to say, USA, we are working with you. We're trying to get this matters corrected. Don't lie to us. Don't say that this is not happening. Is either, do you believe that? Do you disagree with that? That's up to you. But the claims that the China is just out for the Alibaba and out for all the US companies, it just doesn't seem right when Hong Kong is coming out with statements denying all those claims. The response was followed by comments by the SEC, Gary Gensler, who on Thursday said that Hong Kong, mainland China were the only two jurisdictions that historically not worked with the PCAOB, while 50 others have done so. He highlighted Hong Kong and China's non-cooperation in a statement announcing the final amendments to the Holding Foreign Companies Accountable Act of 2020, which became the law at the end of last year. So this law is basically saying that if you don't comply with our regulations, with our auditing firms, that we're going to give you 3 to 4 years, like a 3 to 4 year grace period to allow us to do that. If you guys still don't comply, we're going to kick you off the New York Stock Exchange. So even with the delisting risk, we still have 3 to 4 years to see what happens, see if this goes down. The law stipulates that any foreign company listed on the U.S. exchange faces delisting if it fails to turn over audit results for 3 straight years. The most recent U.S. inspection of Hong Kong took place in 2013, the most recent, said Kelvin Wong, chairman. There is no restriction on the PCAOB being able to inspect working papers in Hong Kong. These guys are saying there's no restrictions. There's no auditing limits. So do we believe them, or do we believe the U.S. government saying we haven't been able to do it? Because he's just saying you guys got to retract your statements. Officials have free access to inspect in Hong Kong, he said in an interview, adding that the PCAOB, the SEC, used to make a distinction between Hong Kong and mainland China. So that's what he's saying. He's saying Hong Kong was always allowed it, but the mainland China companies have not allowed it. And that's what he's saying. But I guess he's reverting that back, and he's seeing what's happening in the market, the carnage, and he's saying like companies like Alibaba, people are just super fearful. So he's just trying to calm everything down. Regrettably, the distinction has not been made recently as they did in this past. Further, even then, the SEC statement is not entirely correct, as the restriction is on work papers located in the mainland. So they're saying they separated the mainland from the actual companies in Hong Kong. Wong said U.S. regulators could inspect audits of the U.S. listed companies anytime, as long as the documents concerned are not in mainland China. From the PCAOB's data on the U.S. listed companies audited by Hong Kong firms, there are a number of companies where no part of the audit was performed in China, he said. Hence, the working papers of these companies were not in the mainland China. So they're making a distinction between mainland China and Hong Kong. In mainland China, those companies, they're gonna probably get delisted if they don't have an access to the Hong Kong Stock Exchange. When you have access to the Hong Kong Stock Exchange, you have to get audited. They're allowing free range auditing, and they're saying the big auditing firms are actually the top 4 auditing firms are all auditing Hong Kong companies of Alibaba, of Tencent. For example, U.S. listed Hong Kong company Melco Entertainment was audited by a Hong Kong accounting firm in the city, and its papers could be accessed by its U.S. regulators. It's absolutely incorrect and unfair for the U.S. SEC to say that Hong Kong has now allowed to require inspections by the U.S. audit regulator, said Clement, managing director of Hong Kong's 5th largest accounting firm. After the final amendments to the Holding Foreign Companies Accountable Act of 2020, the SEC will establish procedures to identify and list companies that has put the more than 200 U.S. listed mainland Chinese companies at risk, as China does not allow audit papers to be taken out of the country for inspection, which does not comply with U.S. regulations. So I guess that's the hiccup. The U.S. regulators want to take all those papers and bring it to their firms in the U.S., but Hong Kong says, come to Hong Kong, you can inspect their papers, you can do your own audits on the firms. So I guess that's where the hiccup is. At the end of the day, I see them working together. They're working this out. They're going to fix this, because remember, there's trillions of dollars, there's billions of dollars going in and out of these markets. Think about that. Why would USA, you remember, USA is greedy. Like, why would they lose all those billions of dollars over this small thing? US, like, they made billions of dollars. They made like $82 billion just from IPOs in China, and IPOs in the New York Stock Exchange from Chinese companies. All those fees and all those accounting firms working with China. You think they're just trying to lose all that money just because of some little regulation? I doubt it. So that's my opinion, man. Tell me what you think about this video. They responded about the Alibaba delisting fears and the Xi Jinping fears and all of that good stuff, man. So guys, can you please comment, like, and subscribe to my channel? Thank you. Peace.